Him's House, episode 22. This is an emergency podcast. We've got a ton to discuss. This was going to be an earnings podcast, but just this morning, the semaglutide shortage was officially declared resolved by the FDA. So again, this was going to be an earnings podcast, and we will talk about earnings, but I want to discuss the semaglutide shortage first. The stock had run close to 3x this year, from the mid 20s to I think 72 at the high point. We touched that this morning the moment the peptide facility acquisition was announced. And then I think it was 30 seconds later, the FDA marked semaglutide as resolved, the shortage as resolved. We're now trading in the mid 50s. I think we hit 50, maybe dropped a hair below it. But I think it's worth saying we knew this was coming. We knew all along that it was only a matter of time before semaglutide was taken off shortage. I was talking to Bayside before the show, though, and I want to say welcome back, Bayside. I was talking to Bayside before the show. We did not expect the semaglutide shortage to end so soon. So insofar as this caught us by surprise, it's more of a timing thing. Bayside, I want to go to you first. How are we feeling this morning in light of the news? What is your take?
Well, it's quite the roller coaster. If you give me a second, I'll tell you what I was going to say prior to this morning's news, and what I still think is not too different from that. From my point of view, there's two different ways to look at this situation, and I think Lewis, you'll agree with this based on things you said in the past. You can view this as a short-term trade, or you can view it as a long-term trade. In my view, if you're a short-term trader, that Hims was clearly, in my view, overvalued, especially when you get into $70. Because at least based upon my valuations, as of today, I put a price on it around $45. As of the end of this year, I thought maybe $60. But if we go out a year past that to the end of next year, then we're over $100. So those are three very different price points. If you are a short-term trader, you could say, well, $70 is too much. It should probably be lower than that. And then, of course, it went off shortage and it's down in the 50s, which seems to validate that point of view. On the other hand, if you have more of a long-term perspective on this, then it is a tremendous bargain. It was a bargain probably even at 70 if you really thought it was going over 100 within a year. So the question is, what is your time frame? And I remember I've seen people on the Discord say, I thought NVIDIA was overvalued. So I sold thinking I was going to buy back, or pick some other high growth stock that they sold thinking that they were going to buy back. And that's a huge risk, because for a lot of people, those buyback opportunities never come. And they took a short-term decision while not really paying attention to the long-term valuation. And so right now, I would say, since semaglutide did come off, I would say probably we're getting a little bit of a dead cat bounce, because a lot of shorts are probably covering right now. I think it possibly could come back down into the upper 40s again. It's touched that already this morning. But if it does that, in my view, it becomes a tremendous buy opportunity. And the last thing I'll say, validating some of this, it's basically what's been happening over the past few months and few weeks, especially. And you've already, Jonathan, you've pointed this out, and I think in the Discord, institutional ownership of Hims has gone way up very recently. And that's not dumb money. Those people were not buying knowing, because everyone knew that there was a high chance that we were going to roll off shortage. And yet there was net institutional buying anyway. Those people are making those decisions based on the long-term implications of the stock, not the short-term implications of the stock. So I guess what I'm saying here is the decision this morning does not change my view. If you are a long-term investor in Hims, this is a buy opportunity.
I want to discuss how it changes the story for 2025, though. And we're going to hear more from management. And I think it's worth discussing. What does 2025 look like
Mhm.
in light of what Andrew Dudum says on Monday afternoon? But it's Friday afternoon. We got 3 days till then. So let's speculate a bit about what 2025 looks like with Hims unable to sell semaglutide. Perhaps, let's see, would it be May? After May, that would leave, I guess. So they're going to be able to sell it through most of the second quarter, without a doubt. Is that correct?
Is that a question to me?
Yeah.
I'd have to go back and look. I remember there was a 60 and 90-day grace period that the FDA offered on tirzepatide, depending upon whether it was a 503A or 503B facility. I forget which one was longer, but I'm
Yeah.
assuming that they're doing the exact same thing here. I
And
have not seen confirmation of that, but I assume that they are.
I don't think we've gotten an official FDA release. We have the so if you go to the FDA shortage website and you type
Mhm.
in semaglutide, you'll see that the status has been marked resolved. But we
Yeah.
haven't gotten one of those memos from the FDA detailing exactly how they're going to treat the 503As and Bs as they did with tirzepatide. So that's probably to come, but
Yeah.
nothing there yet, and so we'll learn more. But I want to talk about this as well, which is that we have a friend on Twitter by the name of Paul Caro, excuse the pronunciation if that's incorrect, whose analysis recently has been suggesting that GLP-1s are close to 50% of sales in recent weeks for Hims. That's using credit card data, the accuracy of which has been thrown into some doubt. It could be noisy, but it's clear that the share of revenue made up by GLP-1s is skyrocketing, at least in the first quarter. Um, so, I mean, what do we think? How do we think about the second half of the year for Hims?
I can give an answer, but I would love to turn it over to others so I don't monopolize too much. I haven't looked at the percentages, but I think it is accurate to say that GLP-1s is a very, very high percentage of revenue in the quarter just passed and in the current quarter, Q1 thus far, and will probably continue to be that through whatever time period, grace period they're given, 60, 90 days, if that's what they end up doing. But in my view, one of the big pieces of the pie that's been missing in the analysis, including Paul, who I've spoken to on occasion, is that GLP-1s by themselves are a high revenue item, but have not been contributing substantially yet to the bottom line for Hims. There's basically we've been in the front end of where Hims always loses money on any new product. They're investing for the long term, and so the adjusted EBITDA has not been tremendously different from what you would have expected it to be if Hims had never entered the GLP-1 space at all. But that is not to say that there are not profits to be had, but those profits come down the line as mostly, frankly, when they convert away from GLP-1s towards the alternatives, the backup plans. So the oral meds, whatever level of personalization they are able to do. By my estimate, while revenue will definitely come down once they can no longer market GLP-1s, on the adjusted EBITDA side, I think it's going to actually go up. And so one of the really interesting things that we'll see, and now that this decision is made, when we get earnings on Monday, that guidance, which I always thought would assume that the GLP-1s would roll off shortage, was going to knock people back in a positive way, going, oh my gosh, okay, sure, revenue. In fact, I think revenue will still be up year over year, but more importantly, adjusted EBITDA, and they're going to be super conservative, but it is still going up. And that will, before I assumed that they were going to assume that semaglutide would be done at some point in Q2. That will still be true, but now we can be assured that their full year guidance will assume that sema rolls off shortage. And I think people are going to be surprised at how good those numbers are, especially on the adjusted EBITDA side. When people are assuming a disaster, it's not going to be there.
Were you thinking the GLP's not really contributing to the profit part? Is that because it's really expensive to obtain these GLP-1 patients, the customer acquisition costs, or is there another reason why?
That's part of it for sure. The customer acquisition costs are way higher than normal, but that's because you're acquiring a higher value customer. The cost just associated with the getting the drug itself, the marginal costs are higher. They already have said that their gross margins were going to be going down because of this. But the profitability tends to come. My guess is there are probably no categories that Hims has entered that where they didn't lose money in the first year. And just generally, if you look at the LTV analysis, it usually on any, just forget even a mature product like hair, when you acquire a customer, I mean, by my numbers, it takes about a year to recapture all of the variable costs, not just the advertising, but actually the margins associated with that. It takes about a full year to cover all of your costs. And then after that, you'll have about 33% still retained of those original customers. And at that point, around 55% of that revenue is going to your bottom line. That's the underlying engine that drives the growth. So for GLP-1s, it's not going to be any different. They're lucky that they're kind of breaking even on GLP-1s, because normally they would be losing a lot of money in that first year on GLP-1s as well. So there's a built-in profitability that is yet to come that would have occurred either way in the back half of this year. And I think it's still going to happen. It's just that those customers are going to be transitioned to higher margin products like the oral meds. And that's the big surprise that I think is going to come in earnings on Monday.
Bayside, I want to clarify something that's just broken on, found it on the Discord first, and it's I'm just going to read it from the Bloomberg terminal screenshot here. FDA won't act against compounders after Ozempic shortage ends. The US FDA said it won't take action against compounders for violations, and this is what I want to clarify, for violations of the FD&C Act after the agency resolved the shortage for Novo's weight loss and diabetes drugs, Ozempic and Wegovy. A couple bullets. Agency, that's a typo. Agency says it wants to avoid unnecessary disruption to patient treatment. Agency says it may still take action against violations of other statutory or regulatory requirements.
So that sounds like they're doing the same thing they're doing on tirzepatide. They just didn't give a number of days in that, I guess.
Got it. So it's just to say, Hims cannot compound indefinitely.
Right. That I would love to see if they actually tie a 60, 90-day window to that. But that sounds exactly the same, the thing they've been doing with tirzepatide.
Okay. Turn it over to you, Lewis. I know your approach and perspective is probably it's notable because it's a long run perspective through and through. You've sort of brushed off anything related to GLP-1s. It's very admirable because Hims is a 5 or 10 year thesis. Given all that, how are you feeling?
Well, I feel great, largely because of all the principles that we've espoused on this podcast since the first episode. But I think, coming back to 2023, like if you go into the Discord, you'll see my LAS. My name is Lewis Alexander Stevens. You'll see my LAS index. And within that portfolio, Hims started as, I think, a 2% position. And it was bought at $6 a share. And when it was bought, the identical bear theses that we're reading today related to slowing growth, related to exploding customer acquisition costs, which in essence is a churn bear thesis, the same bear theses were being asserted by specifically Spruce Point Capital, with all due respect to Spruce Point. And, Spruce Point is down negative 900% at this point. And, my very simplified approach to investing has resulted in me, in the LAS index, experiencing 800% gains on Hims, and it's now a much larger position. So I do think it's worth considering the nuance of the thesis in depth, of course. I think the nuance of GLP-1s has totally derailed us from the underlying thesis. I mean, we're no longer tethered to reality. as a byproduct of discussing GLP-1s to the extent that we have. And what is reality? The reality is HIMSS is an AI orchestrated general physician at national scale. And if you don't believe that, you shouldn't buy the stock, and of course it hasn't fully materialized in that way, but that's the essence of the thesis. And on that platform, the platform that is an AI orchestrated general physician at national scale, the business is releasing new SKUs methodically year in and year out. And that process results in increasing LTV, LTV to CAC specifically, and ultimately LTV feeds into the net present value of the business. And this isn't for those that are trading at near term, those that are really involved in the thesis. Obviously, I'm not really talking to you. This is for, the general viewer who wants, the retail investor who doesn't understand essentially anything about what, GLP-1s or the FDA shortage or all the various financial metrics. It's like, what is the underlying thesis? What is the base reality for the business? And it is what I just shared. So I think that's important to note. I read a short thesis yesterday that was identical to what Spruce put out 2 years ago when HIMSS was just starting to generate free cash flow. We're now at, as I always say, 7 out of the last 7 quarters having generated free cash flow, 8 out of the last 9. Coming back to those principles, it's just a matter of focusing on what matters for the business. So I think, from my vantage point, I focused on the 4 points of stock value. I focused on nesting the business within a well-diversified portfolio. I focused on value investing. I personally have considered it a lot, but what is the greatest value I can create for you? What is the listener? Is to focus on the 4 points of stock value, which are number one, what is the free cash flow per share a company generates? And specifically, this involves making assumptions about margins. So will HIMSS margins, free cash flow margins, profit margins land at 5%? Will they land at 10%? Will they land at 15%? Could they be 25% if we can disintermediate labor via MedMatch and enhancements to AI and installing the legal framework necessary to achieve that over the long term? That's a question, that's an assumption that needs to be made, right? The shorts are saying the stock's overvalued at $50 a share. Okay, well, where are free cash flow margins going to land? Because if they land at 5%, yeah, maybe that's correct. If they land at 25%, then it's unequivocally not correct, right? So that's the first point of stock value. Number two, what is the growth rate of that free cash flow per share? And this is a question that needs to be addressed. And a lot of this podcast has been spent addressing it. And that question is answered by the total addressable market and analysis of the total addressable market that HIMSS has. And the company has said that they're going to achieve 10 million members. And so how do they achieve that? And we have to look at the product roadmap and look at what's the TAM for test. I think every man in America should consider test in their 40s and 50s. What's the TAM for menopause? What's the TAM for finasteride, minoxidil? What's the TAM for all of the SKUs on this product roadmap? And there's 10 to 20 SKUs currently on the product roadmap, right? So first, we have to make an assumption about what long-run margins will be. Second, we have to analyze what long-run growth could be. And in a lot of ways, these are totally unknowable things. What is the long-run margin profile? If we do get that doctor disintermediation in the early 2030s or whenever it comes about, then the margin profile is going to be, 35%. This is the same issue that investors faced with Netflix in 2011. There was slight growth deceleration for members, and that created an environment that created a scenario where the stock fell 80%. So margins were at 5%. Nobody really knew what Netflix long-run margins would be. Now we know that they're like 20 to 30%. They're phenomenal. Their software margins are very durable. And this is going to take me to my third point here, the third point of stock value, and then I'm going to get off my soapbox. But nobody really knew in 2011 what the long-run margins for Netflix would be. The business didn't generate free cash flow for the first 20 years. The fact that we've generated free cash flow in 7 out of the last 7 is really incredible. 7 out of the last 7 quarters is really incredible for such a young business at only 6.5 years old. Number 3, what's the durability of the cash flow? No, nobody can be positive, but we do know that a lot of these products are for life products or multi-year products, and that enhances the value of the business because the initial outlay of capital provides us a good foundation, or is justified by the future cash flows of these durable businesses. And then number 4, what's the next best alternative? Interest rates. The last sentence I'm going to say, and then I'm done talking. I just wanted to share this because the stock's down a lot, and we want to defend the logic of this podcast since episode 1, and we've been doing it for 25 episodes now. But I think that should tether us. And now that we're grounded in reality, it's worth considering what's going on over the next 6 to 12 months, because that is fun and that is interesting. And if you're day trading, you can make some money.
All right. So thank you for anchoring us to the long run thesis. It really is valuable, and appreciate that perspective. A few more things that we do know, because there's a lot, according to you, Lewis, that we do not know or can't know. The FDA did clarify its policy. It released the memo that I was talking about. And you're exactly right, Bayside, that 503As will be able to compound for 60 days. 503Bs will be able to compound for 90 days. So HIMSS, I think, is looking at being able to compound until May 22nd, 2025. That's the date given on the memo. We have a ton to talk about. HIMSS made 2 acquisitions this week, and we haven't talked about that at all. Do we have anything else to say on semaglutide before we move to that?
I'll say that HIMSS will sell GLP-1s eventually. Like, we're getting all up in arms. They're going to sell GLP-1s. And if you're not going to, retire, make your $1 million this year, eventually they're going to sell GLP-1s and also a host of other drugs in the weight loss SKU category, within which there's all these SKUs.
Great. Let's move to the acquisitions. On Tuesday, I think it was Tuesday. Oh, shoot. I don't know if it was Tuesday or Wednesday, but earlier this week, HIMSS announced it was acquiring Tribe Labs, an at-home testing facility. Today, again at 9 a.m., it was announced that HIMSS is acquiring a peptide facility. Weirdly, the name of the peptide facility was not disclosed. I did a little digging on Twitter. Someone congratulated his friend for the acquisition. It would appear that the name of this peptide facility is CS Bio. It's a Menlo Park facility. I want to move to Dr. H, who unfortunately hasn't been able to get a word in yet. Could you walk us through what this means for HIMSS and why these acquisitions are important to the future of the platform?
Yeah, with the acquisition that was mentioned today, with the peptides facility, it's very interesting because the name wasn't mentioned specifically, but good job for you, Jonathan, for trying to dig that out. There's been questions on the Discord about whether HIMSS is going to wade into the area of peptides therapy. For those who aren't aware or don't know what peptides are, amino acids basically is what they're referring to. It's GLPs are peptides, but when people are asking about peptide therapy, it's different from the GLPs. This is a new and more emerging area of science medicine that people are exploring treatments by their amino acid peptides that help with metabolism, developing muscle gain, theoretically weight loss. It's currently in its current state not part of like the mainstream medical community and medical medicine treatments right now. It's more, people are talking about using these, they're getting some information from podcasters, influencers, Andrew Huberman. It's a very emerging field. So for this, and I've said it a couple times actually on Discord, I'd be kind of surprised if HIMSS would enter this area now, because HIMSS has always focused on current medical practices, bread and butter treatments. As a aside, with the semaglutide thing today, I was, when they first announced weight loss back in May of 2024, it wasn't GLPs, which surprised people. They started out with the oral medicines, the classic medicines like bupropion, metformin, naltrexone. So in light of today's news, as a light segue back to semaglutide, I always wonder, why did they start with that oral medicine first? When everyone was expecting GLPs. So what was the strategy? Were they trying to establish that they can roll out a weight loss treatment that was not a GLP and prove that it's effective, prove that it's business savvy prove that they can make money on it. And I keep coming back to that. Why do they do that oral medicine first? So I feel everything they've done has been strategic. So I would definitely like to see what they say in the earnings call about the GLP decision, but it keeps me grounded to know that when they first rolled out weight loss, it wasn't GLPs when everyone wanted them to. It was the oral medicines. So, but basically, coming back now to the peptides, I think this is a future play. It's not anything that's mainstream right now, but it's gaining more and more popularity. There needs to be more clinical research into the efficacy of what these kinds of peptides would do for your metabolism and your body composition and things like that. But they are definitely like looking forward 3, 4, 5 steps. I would presume a facility like this also, because they're under the CGMP, current good manufacturing practice regulations. So it's an FDA program that they carefully monitor how drugs are manufactured and they maintain compliance. So this facility does do things under CGMP. So you could theoretically use this facility for other things aside from the peptides that they are currently working with.
I had an interesting experience where I was considering TRT, not because my testosterone's low, but because I like bodybuilding and fitness. And what was interesting is that I was going to these TRT clinics and they were saying like, no, you're super healthy. Like, there's no reason for you to be doing this. You should just get on peptides. I was like, okay, I don't know what peptides are. But anyway.
Yeah, if you go to any regular clinic, primary care clinic, your doctor's not going to know much about peptides. It's that new, that emerging. A lot of people are getting information, online, and doing it that way. So it's that new of a thing right now.
Yeah, I guess I just found it interesting that these TRT clinics are pushing peptides. So maybe, I don't know, maybe the medical community is embracing them. And that's, HIMSS is just kind of reflecting that with its advance into peptides.
Dr. H, I'm curious, which of these acquisitions, the first Tribe Labs, the at-home testing facility, the second, the peptide facility, do you view as more significant to the future of HIMSS?
I feel the lab one is very significant. I've mentioned many times that testosterone is a big market that can be expanded into, but there's logistical hurdles that need to be done for testosterone treatment. You do need lab work done initially to confirm that you are low in testosterone. And then you need to do baseline labs, check your liver function, your prostate level, things like that. And then as you're treating or trying to bring up your testosterone level, you need to monitor it to make sure you're not overshooting it. You need to make sure that different things medically aren't getting compromised, like blood counts and things like that. So the lab acquisition really opens up many treatment options, not just testosterone, but you could theoretically apply this to any medical condition that needs some sort of lab testing. Lewis has mentioned he envisions this as a AI orchestrated primary care provider. It would open up avenues for preventative care, looking at your whole body health risk. Andrew Dudum has mentioned in his tweets that he wants HIMSS to be positioned to help provide whole body care. And that leads right into preventative care. You're looking at, your heart risk, looking at your cholesterol, cancer risks, things like that. So there's a whole world that can be opened up just by having lab capabilities. And I mentioned also, just to use testosterone as a specific example, there are other companies that do online testosterone. And one of the options for lab monitoring, other companies have partnered with labs like LabCorp and Quest. And, it creates, when you do it that way, you're creating another bottleneck. You're depending on a third party lab to make things flow really well. So you're going through, LabCorp's appointment scheduling system, and they may be 4 or 5 weeks out, and then you have to depend on them to result the labs and send it back to HIMSS. So this also goes with HIMSS' strategy of being like a vertically integrated system. You have this lab in-house now. You control getting the labs done. The flow of information is direct, straight to your physicians. you can have a say in the protocols and the workflows of how the lab operates, when you have it all in-house. So between the lab and the peptides facility, I think the lab really opens up a lot of avenues for HIMSS' sake. And then you start gathering all this data from the lab work of all your subscribers. You can then use your AI system, MedMatch, to really analyze these results you're getting. And when you're using AI, you can find new novel ways of using medicines to address the needs of your patients. I'll point to the example of when HIMSS introduced the heart healthy ED medicine. It combined an ED medicine with a statin medicine, and the statin medicine is a heart medicine that lowers your cholesterol, but also significantly lowers your heart risk for things like heart attack and stroke. So these are not new medicines. HIMSS did not research and develop and do the clinical trials for ED medicine and statins. Those are all generic established medicines, but they're using it in a new novel way, combining the two, using the data they had and identifying that patients who have ED perhaps have a very high risk factor for developing heart disease and stroke and heart attack. So they're using it in a way to combine the medicines when historically you would have had to take two medicines separately. So I'm excited for the data and information that they can accumulate from the lab, because it will not only allow you to do new treatments, but you can also look into other custom formulations that you can develop that other companies don't have yet, and that increases your moat, increases how unique you are into these offerings, and that's just another aspect of that lab acquisition.
Great. Thank you for that, Dr. H. In the final 10 or so minutes, I do want to discuss earnings. I'll just give the numbers real quickly that that Wall Street's expecting and that HIMSS is expecting. HIMSS guided for 465 to 470 million in Q4. Wall Street is expecting, I think it's 482 million in Q1. Now, we released some projections yesterday that suggest guidance is going to be much higher than 482 million for Q1. We'll release that to everyone on Monday. If you want access, you can subscribe today. In any case, those are the numbers. I think consensus, at least on the Discord, is that Q4 doesn't really matter much right now. It's all about guidance and what HIMSS is going to say about the future. I want to go around the horn and hear what each of you is going to be listening for during that earnings call, which should start at 5 o'clock Eastern time on Monday. Let's start with you, Bayside.
I'll be listening for frankly, I don't care about Q4. I mean, I think, plus or minus 10 million, whatever the number is not going to be a big deal. We know that the current quarter, is off to certainly a big start. Given the news that happened this morning, again, I don't think that's going to be the big driver of anything. For me, the singular biggest thing I'm looking for is, what is the full year guide look like? And does that guide include the assumption that GLP-1s have rolled off, which of course we got that decision this morning. My expectation is that the full year guide will be conservative per usual, but that guide will still show conservatively a good 30 to 35% growth, both in revenue and in adjusted for 2025 compared to 2024. Which will be guidance that assumes semaglutide has gone away. Now, I think they will substantially beat that conservative guide, but they'll guide conservatively. And then the question is, how does the market react? I mean, what's going on? HIMSS is telling us that both their revenue and their adjusted EBITDA are going to be higher than 2024, even after semaglutide goes away. And people are going to have to noodle on that and go, wow, maybe this wasn't the big disaster that we thought it was. And I guess I'll just conclude by saying I just wholeheartedly agree with what Lewis was saying, which is, if you have a long-term perspective on this stock, it's weird. This what just happened today is not the disaster that people think it is.
And Bayside, I want to clarify something real quick. So you said you're looking for 30 to 35% growth full year.
Yeah.
Let's assume we're close to 1.5 billion in 2024.
Mm-hmm.
The midpoint of the 30 to 35 takes us close to 2 billion for
Mm-hmm.
2025.
And I think
right?
they'll beat in reality, they'll beat that number. Yeah.
Okay. And you're saying that's total company revenue growth, not growth of the core business. Is that right?
That's total company. Yeah, that's true.
Total.
So that includes obviously a portion. Now we're on February 21st and we're going to go for another 60 to 90 days. And then there'll be some conversions over to personalized plus oral meds and so forth. So some of that increase will include the revenue they've already booked. But nevertheless, I think the core plus my embedded in my assumption that it's going to go up is that they're going to convert 30% of the revenue over of the current GLP-1s. That includes the oral meds are obviously substantially cheaper. It's the adjusted EBITDA number that's I have greater confidence in, just because those oral meds are so much more profitable. I mean, I think they were basically running on breaking even on GLP-1s up until now. It looks that way to me. If you were to look at, and you'll see that in the numbers they release on Monday, look at that quarterly EBITDA number, and it looks as if, who heard of GLP-1s? It looks as if GLP-1s never existed. It's on the same track that it would have been on if they had never got into it in the first place, which tells you that in terms of impact on profitability to date, GLP-1s has really had almost no effect because they essentially been breaking even on them, which is actually better than usual because they usually lose money. So that's my take. Look at the full year guidance. I think 30% number year over year for full year tells you that they're on track.
That was one heck of a take. I love that. Okay, Lewis, you're up.
So I know I've been the GLP-1 Scrooge. The first episode, I think I said, I'm not even thinking about GLP-1s. Like, I'm not worried about them. They'll come when they come, and they are going to come. They are going to be on the platform eventually. But so I know I sound like Scrooge. I'm kind of a wet blanket related to the GLP-1 discussion party. But I think it's worth being excited about the construction of what is a compelling, vertically integrated platform that creates a differentiated user experience, which creates higher consumer surplus, alongside differentiated unit economics, right? So we've talked about on this podcast often, Walmart was a vertically integrated platform that created a differentiated user experience, and alongside that, enhanced consumer surplus, where consumers are paying less for the same product, and that creates higher consumer surplus. And there were differentiated unit economics that created that higher consumer surplus. Amazon, Tesla, Uber specifically, and I think Uber is one of the most prominent companies to which we can compare HIMSS in such a way that we better understand the company. We've talked about the fact that Uber is this vertically integrated platform that took routing, payments, driver HR, human resources for the driver, mapping, all of this technology, and it put it all into one seamless app. And so, we talk so much about GLP-1s, and it's a very valuable discussion. And again, they're going to be on the platform, whether it's this year or next year. Imagine 2028. It's like, oh, we sold the stock off 90% because GLP-1s were off the platform, or whenever the patent comes off, 2030. And then all of a sudden they can sell GLP-1s unfettered. It's good to discuss it, but it would be crazy to, become downtrodden because GLP-1s can't be sold for a couple of years. Weight loss went from 0 to $100 million ARR business in 6 to 9 months. So the GLP-1 discussion, it's a lot. But my point about all of this is it's really fun to analyze the construction of this compelling vertically integrated AI general physician and AI orchestrated general physician at national scale. And one of the carrots in front of us could be that there is doctor disintermediation. There certainly has been doctor disintermediation because they've been firing doctors to hire nurse practitioners, and that alleviates the burden of labor on the P&L, and that expands margins. So, we're simultaneously, and I think it's poetic because simultaneously we're getting these announcements of acquisitions that are creating further vertical integration, that are creating the opportunity for HIMSS to deliver a compelling differentiated user experience with differentiated unit economics. And simultaneously we're getting, and alongside that, we're getting GLP-1s, it's the end of the world. Can't sell GLP-1s for a couple of years. You don't get to buy your Lambo next year. It's going to be in 2030. Sorry. And I note the weight loss data that I just shared. The fact that it was already the most successful product category that they'd ever had, reaching $100 million of ARR in 69 months.
All right, moving to Dr. H.
I'm done.
I'm a physician. I want to hear what they say about strategy in providing medical care for the patients. News travels fast. I see patients within a day ask about, hey, what's going to happen with my tirzepatide, when I'm prescribing those to these patients. So they're going to start asking the customer support at HIMSS and the physicians, what are you going to do with my medicine in 2 or 3 months? So I really want to hear the strategy for this year of how are they going to provide support to these patients. Are they going to switch them to the oral medicines? Are they going to announce, other alternative medicines like the liraglutide, which, some people might not enjoy doing a daily shot. But I want to see what they're going to do with that. The HIMSS has been historically a very in tune company with their customers. I think they announced not too long ago they wanted to open up a community advisor group where they would have members of the community provide input, and they could really help drive strategy for HIMSS. So I think they have a good temperature gauge on the community. I'm sure they look at the Reddit community for people on their medicines. So that's going to be a big thing for them to address. I want to hear what their plan is for these new treatment options. They've teased and have mentioned their plans for menopausal care and testosterone. Is that coming out in the next 3 months, 6 months? How close is it to being rolled out? And I want to hear what their plans are for that.
Well, great. This has been HIMSS House, episode 22. Maybe our first emergency pod, certainly not our last. Thank you, Lewis, Bayside, Dr. H. We will again have a live stream on Monday after the bell when HIMSS reports earnings. In the meantime, would love if you like this video, subscribe to our YouTube channel, subscribed on Substack, hopped in the Discord. Thank you so much. We will see you next time. Bye-bye.